Yeah. Hi friends. Chalo, let us get into Ind AS 20, that is government grants. Yeah, government grants, accounting for government grants. This is a small standard, and I don't think so. It will take too much of time uh, to complete this MCQ discussion and everything. Okay. Yeah. Uh, just a second. Yeah. Done. Yeah. So chapter. So Ind AS 20, accounting for government grants. Yes. Let us, as usual, let us summarize this in 5 to 10 minutes of time. Except the big standards, no, it will take too much of time. All right. So if you are watching in YouTube, at least after listening to the class, if it is useful, please share it with your friends. So let that be useful for everybody. That's all my wish. Right. What is government? Government gives central government, state government, international government, any government. Correct. At the same time, what is a grant? Grant is subsidy, grant is incentive, grant is duty drawback. Yes, grant is duty drawback as well. Yeah. So what is a government assistance? Government grant is government assistance by the transfer of resources, that is cash or kind, for the past or future compliances for the conditions. Correct. So somebody people have already satisfied, are going to satisfy. That's why government is giving some kind. It may be in kind or it may be in cash. Some assistance is going to be given. Okay, right. So the examples are many, right? How do you account directly? I mean, how do you account? If you want to account, first, if you want to bring into the books of account, first you have to satisfy two conditions. What are the two conditions? There should be reasonable assurance that the conditions attached. See, no government grant is free. So obviously the conditions whatever attached are going to be satisfied. That is the reasonable assurance, a reasonable certainty from the company that you have to say. And the second point is that there is no uncertainty with respect to collection. Right. Next, not like accounting standard 22. Right. Accounting standard 12. It says like you have got two models, that is income approach and capital approach. If it is a capital approach, it will be transferred to capital reserve. But there is no such kind of capital approach in the given in the standard in the AS 20. So everything is going to be only income approach. That means it will be routed through profit and loss statement. Okay, yeah. If it is rooted to profit and loss statement, I mean, if it is rooted to profit and loss statement means automatically we will say it should be logical fashion. What is logical fashion when it with respect to profit and loss is you recognize it in the ratio of expense. That is nothing but matching concept basically. In which ratio you are going to spend the money, in that ratio you are going to recognize the income. That's all is what the point. Okay, fine. So now what is when it comes to accounting? Yeah, when it comes to accounting, first, have you received the non-monetary government grant, the monetary government grant? What is non-monetary government grant? Non-monetary means which is not monetary. That is, it is neither cash or it is receivable. Okay, so the something in kind basically. If you receive it, okay, sir, I am going to receive something something free of cost. If you are receiving it free of cost, you have got two options. One is recognized at FMV, fair market value, yes, or it can be recognized at nominal value. Yeah, it was recognizing at nominal value was subsequent amendment. For at least for few years, ICA has not changed that in the textbook. Okay, but this was amended. MCA amendment notification also has come long ago. Okay, you have got two options. One is at fair value, or the next one is at nominal value. Nominal value is equal to rupee 1. Yes. So now this is the value. So next, if you record it at fair value, what is that supposed to record? Suppose if you have received a land, so land account debit, fair market value is equal to say 10 CR. Okay, to what? To it can be recognized as deferred government grant. Yeah. So why sir land is no land? So how do I? It is land is received. Correct. But see, when they have given land, no, they must have kept a condition. What is the condition? You should construct one building. Building in the sense like factory. You should start it in 3 years. So there will be some expenditure maybe for the purpose of the construction of building or maintenance of something. So it's obviously there will be something. So it's not like land is given, you do agriculture or something like that. So in which ratio, at least over the life of the building, you are supposed to recognize. So that's why first you recognize the deferred government grant. You are supposed to construct the building or factory. Correct? Now factory will be having some 30-40 years of life. So at least over the life of the building, you are supposed to transfer it to profit and loss statement. That is what the simple example which is given in the standard itself. It is not created by me even. Okay, right. So that is the one. No sir, I have received it at concessional price. Fine, whatever concessional means, say 10 cr amount, you have got it for 4 cr. So 6 cr is the concession. Not a problem. This 6 cr compared to fair market value, 6 cr is the concession. So 6 cr is going to be deferred government grant. Yes, so land account debit to cash 4 cr to deferred government grant is equal to 6 cr. That should be recognized. Okay, right. So this is the matter. So suppose government grant is related to, suppose you have received cash, sir. Okay, when you have got cash, cash is received for what purpose? Sir, when it is directly related to a fixed asset. That means PPE. Property, plant and equipment, that may be what? It may be a depreciable property, plant and equipment, or non-depreciable property, plant and equipment. In this regard, no, whatever I am explaining, that is exactly as per accounting standard told. There is no new point as such. So if it is related to depreciable property, plant and equipment, what have you received? Not the non-monetary item. You received cash for that. So cash account debit should come to, what should I do? You should be regarding either PPE, okay, property, plant and equipment, I mean crediting, or it can be deferred government grant. If it is a property, plant and equipment, what are you supposed to do? Yes, your total cost is going to be reduced and remaining WDV is supposed to be recognized over the period. And if it is a deferred government grant, yes, in the ratio of the depreciation, first record cash account debit to DGG, deferred government grant, and in the ratio of the depreciation expense, you are supposed to amortize it over the period. Right. If it is related to non-depreciable, why did you get the money? To buy a land. Okay. What have you got? Have you got land? No. If you have got land, it is non-monetary item you are supposed to look at. No, here you have got the cash. So since you got cash here, got my point? You got cash here. So cash account debit to what? Now before accounting credit, what is the next question? Are you supposed to spend some money with respect to this? Yeah, so if you are going to spend some money, then transfer it to deferred government grant. In the ratio of expenditure, you should be transferring it to profit and loss. Okay, sir, I don't have any expenditure, I don't have any obligation to perform. Okay, then entire amount can be transferred to profit and loss statement. But generally, practically, what people will do, some people will feel like what makes sense, and which will be reasonable exactly. Okay, that point is always discussion point. And next, suppose sir, I have received some money which is related to some, right now, which is related to what? Expenses, income or expenditure. Then there are two options, that is accounting policy choice. Accounting policy choice, whenever I say accounting policy choice, no, whatever the policy you have chosen, that should be applied for all kinds. Suppose you have, somebody asked me some 2-3 days before only, not even one week approximately. Sir, I have got two grants, sir. One, I wanted to reduce it from the expenditure. One, I want to show it as an other income. My man, it is a accounting policy choice. When it's an accounting policy choice, that should be followed consistently for all the similar kinds of transactions. Correct. Now, for one item, one kind of thing is not allowed actually. It is not reasonable. Done. So here, what are you supposed to do? If it is cash received with respect to an income or expenditure, that should be either reduced from the relevant expenditure, or it should be taken to other income. Again, government grant can never be a revenue. That you need to remember. Next, sir, I have got a free loan. Yes, free loan you have received. Now, if you have received a loan, that is nothing but a financial liability you received. Correct na? For free loan. And you don't need a free loan in the sense what? Interest free loan. You don't need to pay any amount, any interest amount you are supposed, don't need to pay back. So whenever it is a financial liability, immediately you are supposed to refer Ind AS 109. Ind AS 109, initial recognition of a liability. Correct. Initial recognition of financial liability is supposed to be at fair market value. If it is at fair market value, because there is no interest element, you received say 10 CR, the fair value of it may be 6 CR. So there is a value of 4 CR is there. That difference amount is nothing but the government grant. Sir, how should I account this 4 crore rupees? 4 crore should be accounting depending upon the purpose of the loan. What is the purpose of the loan? If it is directly related to a depreciable asset, correct na? If it is directly related to a depreciable asset, then you have two choice. That is accounting policy choice. Reduce that 4 crore rupees from the fixed asset for which you depreciable fixed asset, or you recognize the deferred government grant, and that deferred government grant should be allocated. I mean, it should be transferred to profit and loss in the ratio of the depreciation. No sir, it is related to some income or expenditure. Then no problem. If it is related to income or I mean some expenses you are spending, that's why they, I mean for training purpose something is done. Then yes, if the expenditure is going to happen over more than 1 year, then transfer it to DGG. In the ratio of expenses, you transfer it to profit and loss statement. No sir, everything will be spent in the one day, one shot only. Okay, then this entire amount will be transferred to profit and loss statement. Okay, right. So that is depending upon the purpose basically. Okay, refund of government grant is very simple accounting, just reversal accounting. Earlier you have transferred to profit and loss a DGG, correct na? Okay, what are you supposed to do now? If you're refunding, first DGG account is going to be debited to the extent which is lying in the balance sheet. Remaining amount, correct na, to cash, what is the amount exactly you are repaying them, the difference amount will be transferred to profit and loss statement. Okay, yeah, anytime difference may be debit side, difference may be credit side, it is supposed to be transferred to profit and loss statement. Sir, it was earlier reduced from the property plant and equipment. Okay, it must have been reduced from the property plant and equipment in the past, correct na? Now when you are adding, when you're refunding, what are you supposed to do? You are paying the money, so to cash, correct na? You are adding it to the property plant and equipment. Now you should add it, but at the same time you are supposed to do what? Yeah, if I had not received the government grant, what would have been my depreciation all these years? Okay sir, if I had not received, no, I would have depreciated 500 rupees, but because I have received the government grant, I have depreciated only 200 rupees. So the remaining 300 rupees is the difference. 500 rupees minus 200 rupees, 300 rupees should be charged immediately in the current year. Remember, it is not an estimation, it is not an error in the past or something, it will be hitting the only current year it is going to hit. So this you are supposed to recalculate the accumulated, I mean excess depreciation, accelerated depreciation, which is going to hit my profit and loss statement. Okay, so that is the matter basically, my dear. Okay, if it is a government grant, sir, I have, suppose if it is a first adoption situation. What is first adoption situation? Government grants are, I mean, I am adopting from for the 31st March 2024. So my date of transition is going to be 1/4/2022. Correct na? I received 4 years before, sir. Somewhere in 1/4/2018, I got the government grant. Now what should I do? This is a mandatory exemption, my dear. You don't need to go back and come back, but you can do it. But even though it is mandatory, there is still exemption is there. If you have got the interest rate as on the 1/4/2018, which date you got, no, the rates and etc information is every information is available. I will be able to calculate it perfectly. If you say, then you can go back and come back. That means retrospective application is accepted. Otherwise you should assume that, correct. Otherwise what are you supposed to do, my dear? You have to assume that you have received the government grant in the beginning, I mean on the day, say example 1/4/2022, your date of adoption, date of transition, right? Date of transition is 1/4/22. Assume like 2nd April. 2nd April only, if you have received the money, what is the accounting you will do? That accounting only you are supposed to do. This is the quick summary of our accounting stand, I mean in days 20, right? Chalo. So now let us get into this in days 20, accounting for government grants and disclosure of government assistance. Okay, chalo yaar, one by one. Yeah. So the first question, yes. So which Ind AS provides guidance on accounting for government grants and disclosure of government assistance? Arre boss, this is very easy and quick, you know. Obviously, B is the right answer. Right. And the second bit, how is the government grant recognized in the profit and loss when it set up a deferred income? Yes, that is deferred government grant if you have created. Tell me, my dear, what are we supposed to do? It's recognized as income in the year of grant received, DGG. If you are receiving in the year of in the year of income, then why should I transfer it to DGG? First of all, agree or not? Right? Yeah. So it should be recognized to the profit and loss systematic basis over the useful life of the asset. This makes sense. Correct. Now it is recognized as a reduction in the depreciable expenditure over the life of the asset. Yeah, see, that is if it is related to a property, plant and equipment, correct na? Then it is correct answer. It is recognized as a separate item in the other comprehensive income statement. It will never be regarded as other comprehensive income statement. Okay, right. So tell me, what is your answer? Yeah. See, already people have answered B. Okay. Right. Here, there is no clear clarity. How is the government grant recognized in the P&L when it is set up a deferred income? Right. So it is recognized in the P&L on a systematic basis. That is true. Reduction in the depreciation expenditure. See, reduction in the depreciation expenditure, we don't do it. If you recognized as a deferred government grant, no, that that will become other income. It is going to become. You understood my point? Suppose if I have received some government grant, I will record like I have received cash. Okay, cash account debit. Debit to what? Do DGG will record. Next entry, what do you do? DGG account debit. DGG account debit to depreciation expenditure you record करके they are trying to tell here. So which is obviously not correct. Correct na? So what is correct, my dear? To other income you are supposed to disclose. That is other income you are supposed to disclose. That is the reason C is not correct. So B is obviously correct. It will be systematic over the useful life of the asset. Agree? Done. So the third bit. Yeah. Let's go to the third bit. Yeah. So third bit is according to Ind AS 20. When should government grant be recognized by an entity? Yes, my dear. Please look at this. As soon as government grant is offered by the government, silly answer. Once that entity fulfills the conditions attached to the grant, not necessary. When there is a reasonable assurance, then you can do it. Correct, na? Yes. When there is a reasonable assurance, the entity will comply with the conditions and receives the grant. Receives the grant in the sense that is, I mean, there is no uncertainty with respect to receipt. Basically, you are supposed to look at it. Yes, my dear, this is already discussed in the summary. Right. According to Ind AS 20, which of the following is included in the definition of government grant? Tell me, my dear. Local and national bodies only, government agencies only, international bodies only, are all the line items. Yes, Nathanya, perfect. That obviously all. I told you first government includes every kind of government. It should be government, it should not be a person. Government agency also will come into the picture. Correct. Let's go to the fifth bit. Government grant should be recognized when there is dash that entity will dash with the conditions attaching to it, and that grant will be, yes, probable assurance, not exactly. Reasonable assurance, you remember. Correct, na? Reasonable assurance, I mean, there is a reasonable assurance that entity will comply with the conditions and that the government grant will be received. Yes, that means government grant will be received means I don't have any doubt in this regard. Yes, perfectly all right as you people answered. So sixth bit. Yeah, B India Limited, an entity receives a forgivable loan. Okay, forgivable loan from the local government for which it does not have a reasonable assurance. It does not have a reasonable assurance of the meeting the relevant terms of the forgiveness. So how should this loan be treated? Tell me, my dear, which does not have a reasonable assurance. I received the money. Okay, receives the forgive loan to aa gaya, but I'm not confident that I'm going to recognize it. Then it should be recognized as a liability. Yes, payable to government is the right answer. Yes, you people rightly answered. Yes, it cannot be correct. Obviously, it cannot be expenditure or government grant or capital reserve or DGG. No, there is no such concept at all. When you yourself are not confident, it is supposed to be a liability to pay. Correct. If not today, tomorrow they will come and catch you. So if you recognize it to profit and loss as DGG or something, no, tomorrow you are supposed to reduce it from the profit and loss, which is illogical. That is not the right fair accounting, obviously. Done, my dear. Go to seventh bit. Okay, loan at a below market rate of interest is treated as below market rate. Is it a government grant? Yes, 100% government grant. C is the right answer. Perfect, my dear. Yeah, 8 bit bado ya. Right. Two broad approaches to the accounting of government grant are, yes, government grant accounting. Do you have capital approach and income approach? Broad approaches. Yes, fair value approach and market value approach, present value approach and discount value, fair value and approach. Right. See, my dear, there are two approaches, but we will follow only income approach. If you read the bare standard, okay, if you read the bare standard, they have really explained both the things. Both the things in the sense, capital approach in some of the countries they follow like this capital approach, they will transfer it to capital reserve, And some of the another countries may will follow income approach. Actually India is 20 bare standard may both the concepts are explained, but below they say even though there are two approaches, correct na? As per India is 20, we would like to follow only one approach, which is income approach. That's all. They made it very clear. But explanation though they have given there are two approaches. So these two approaches are mentioned in the standard, but obviously not applicable. Obviously, okay, obviously not applicable. Understand? Right. Perfect, my dear. Next, ninth bit. Ninth bit you can look at. Huh. What is this? Excel Limited started a business in a backward area of the country 5 years ago. And due to higher operating costs in such regions, it has incurred huge losses in the previous 5 years. Maybe you made huge losses. It's okay, happens. Government announced a scheme in the March 2022 that company will be granted 25 crore rupees for the losses incurred. When have you incurred the losses? Last years. Is it in the current year? No. How will this be received by the company in okay, however, it's received in the July 2022. Okay, when should the government be recognized? Correct. When should the grant should be recognized in the statement of profit and loss? Yes, my dear. Answer me. Ninth bit. March or July. Receipt has happened. Actual receipt has happened in the month of July, and grant though it is received. I mean, confirmation you got it in the month of March. Hmm? Not in the month of July, my dear. See, whenever there is a reasonable certainty, correct, na? Yeah, it's see, I told you, na, already. Receivable also is fine. It is not necessarily not necessarily it suppose actual receipt should be there. When did I say like this? We never spoke like that. Correct, na? Actual receipt is not required. Read the sentence carefully. Announce the scheme in the month of March itself. So for correct na, that the company will be granted 25 crore rupees. Correct na? Government announced a scheme means generally they will not step back. That is very rare circumstance. So accrual basis, my dear, you can record as what? You can record as receivable. Yes, you can record as receivable. 100% fine with this. Okay, right. How to present grants related to assets? Tell me, 10th bit. Set up government grant, deferred grant, or deducting from the carrying amount of the asset, or any one of these, none of the above. Yes, excellent. Obviously, C bit is the right answer. You have got an accounting correct now. This is what out of these two. This is nothing but accounting policy choice. We told you na accounting policy choice that you are supposed to follow. Yes, my dear. 11th bit. Yeah, Mary Limited has received 40 crore rupees as a government grant from the central government for the purchase of machinery, depreciable property, plant and equipment for development of infrastructure facilities in the rural areas. Excellent. The cost of machinery is equal to 60 crore rupees, right? How will this transaction be presented? So you bought it for 60 crore rupees, you received 40 crore rupees, not a problem. How this transaction present in the cash flow statement in the Mary Limited? Cash flow statement mein how are you going to present it? Correct na? Yeah, cash flow statement mein tell me my dear, 20 crore rupees will you show it as investing activity? Yeah, 60 crore rupees investing, 40 crore rupees financing activity. Yeah, Nathania says B. What about others? Yeah, B is the right answer, my dear. Actually, yeah, B is only right answer. Yes, we discussed this also in the classroom. Yes, it is exactly. The whatever the government grant is going, government is like funding. Correct. Maybe they are not taking the share in your company, but it is like a funding. It is helping you actually. So that's why whatever you spend 60 crore rupees should be showed as investing activity. Whatever the receipt of the government grant you are supposed to recognize as a financing activity. Hope you got it. Yes. So let's go to the 12th bit. Government grants related to income are presented as. Government grants related to income are presented as. Is it other income are deducted from the relevant expenses or A or B? None of the above. It is income. Correct? Na? C. Exactly. You have got this is also what is this we spoke just now. This is nothing but accounting policy choice. This is nothing but accounting policy choice. Correct? Perfectly all right. 13. Yeah, C Limited received a government grant of 15 lakh rupees to defray the expenses for the environmental protection. So it is to spend some money. Entity is expecting to incur the cost about 4 lakh rupees every year for the next 5 years. Not a problem. 4 lakh, 4 lakh, 4 lakh. That means I'll say SLM kind of thing. Which of the following treatment is correct? So when you receive the government grant 15 lakh rupees, shall I transfer it to P&L? 100%? 100% not correct. Correct now. What are you supposed to do? Your expenses are going to be for next 4 years. So that's why what are you supposed to do? This 15 lakh rupees should be deferred government grant. Exactly. Correct now. So 15 lakh rupees is going to be deferred government grant, and it is going to be how many years, my dear? 5 years they said. So 5 years in the sense 3 lakh rupees, 3 lakh rupees, 3 lakh rupees supposed to be transferred to profit and loss statement. Correct now. And expenditure should be 4 lakh rupees. Yes. R. Correct now. Since it is related to expenditure. Agree my point? This is related to expense, income, expenditure. Don't you have two options? One, you can show it as another income, or one, you reduce it from the relevant expenditure also. Yes, you have got an option. So now tell me, my dear, what is your right answer? Right answer is not A, my dear. That is obviously C. This is an accounting policy choice. Na? Abhi bola na? When it is related to income, you can show it as another income, or you can reduce it from the correct na related expenses. In the above sentence we told. Correct na? It is supposed to be either A or B. That is your accounting policy choice. Done. 14th bit. Chalo. Government grant that becomes repayable, that should be accounted for. That becomes repayable. Refundable. Is it a change in accounting policy, change in accounting estimation, or prior period error, or it's a new transaction? It is not an error. While explaining the refund, repayable in the sense refund, repayable in the sense refund. I told you it is not an error. So error concept is not there. Is it an accounting policy? What is your accounting policy here? There is no accounting policy choice. New transaction, what is this new transaction? Nothing. It is nothing but a change in estimation. That's why prospectively you are calculating the depreciation of something. Correct, the depreciation. If you have reduced from the property, plant and equipment, you will go back and you will calculate all that expenses, and then that is going to be charged in the current year. If it is a prior period item, you should go to last year, last year, all the years you are supposed to book and come back. Okay, right. So it is a change in accounting estimation, my dear. It's a prospective treatment, no retrospective treatment, no third balance sheet, no restatement of previous year financial statement, nothing is required. Okay, so it is a change in estimation. Yes, that is the matter to be taken care. Okay, 15th bit. Repayment of grant related to income. Repayment of grant in the sense refund. That's all. That you have to read it carefully. Yeah? Right. Shall be applied first against what? First should be unamortized deferred credit. That is deferred government grant. People will use deferred income. People use deferred credit. That you have to be careful. Correct. All the language words are different. Matter is same. And the balance, if any, that should be transferred to P&L, which we spoke already. Yes, perfectly all right. Yes, my dear. So 16th bit. Read, my dear. C Limited received a grant of 8 crore rupees in the year 2020-21 from the central government for selling rice to lower income groups at a subsidized price for the 2021-21-22. Okay, we received a grant in the 2021 itself. For what? Because you are going to sell the rice at a cheaper rate, no discounted price. This grant was subject to compliance of certain conditions. There were some lapses on the part of the management due to which C Limited could not comply with such conditions, and accordingly it had to repay 8 crore rupees back to the central government during the year 2021 itself. Ended 21. Okay. What should be the treatment of such transaction in accordance with Ind AS 20? Tell me, my dear. You have to think. Few things will not be given very carefully. Correct now. So you received government grant 8 crore. Normally, what would have done? Normally, I mean, assume it, if it is not refundable, what would have done? It's 2 years they told. Have they told in some ratio or something? No income information is given. So that means 8 crore will be transferred to other income, or it should be reduced from the expenses in the equal fashion. That is equal to 4 and 4. Correct. So if the 2020-20, if they have recorded already 4 crore rupees already transferred to P&L. Yeah, correct. So what is left in the deferred government grant? Obviously balance 4 is left. So now when you are refunding accounting, if you wanted to record it, it is refundable. It is refundable, obviously. They said that you are supposed to pay it 8 crore rupees by end of the day. Correct na? Ha. If it is refunding entry, what are you supposed to do, my dear? Deferred government grant account debit 4, profit and loss account debit 4, then that you say repayable or paid to cash, something like that you are supposed to do it. Correct? Ah? Exactly. So that's what you are supposed to do. 8 crore will be recognized in the P&L. When did I recognize 8 crore rupees into the profit and loss? I have recorded so far only 4 crore rupees in the P&L. Then why will I debit P&L for 8 crore rupees? Correct na? Either of A or B. First A only wrong. So either correct na? A is obviously wrong. A is wrong. So either A or B, obviously wrong. Next point you did B. 4 crore rupees recognized in the P&L earlier? Yes, yes. That means assuming that they already transferred first 4 crore rupees and 4 crore rupees were appearing the deferred income adherence to this, correct? Na? And hence 4 crore rupees should be reversed from the deferred income and the 4 crore rupees will be debited to profit and loss statement. This is perfectly right answer. Hope you got it. Which of the following is disclosure requirement in accordance with Ind AS 20? Yes, my dear. Please have a look at it. Accounting policy adopted for the government grant and methods of presentation in the financial statement, yes, required. Nature and extent of government grant recognized in the financial statements, required. Unfulfilled conditions, something are there, correct na? Yes, required. So it is nothing but all of the above. See, generally what happens, my dear? Generally one thing though will happen, which is that these Ind AS 20 relate, I mean not only Ind AS 20, the disclosures aspects generally will take it, I mean lesser value. So that can be asked in the examination. That is the point. Okay, so you should be very 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 careful. Done. Yes. So next 18th bit. 18th bit, Karam Limited has purchased a car for 6 lakh rupees on 1st April 2019. Not a problem. The company received a government grant of 50,000 rupees only in respect of this asset. So government grant is directly related to 6 lakh rupees of car. Okay, life of the car is equal to 4 years, depreciated on SLM basis. Okay, 4 years in the sense what? 1.5 lakh, 1.5 lakh, 1.5 lakh, they will depreciate it. Karam Limited treated the grant as a deferred income. Okay, they have treated 50,000 rupees as a deferred income, they told. Alright. So how should the carrying amount of the car and deferred income on the balance sheet of 31st March 2022 he is telling. When have you got it? 2019 May you got it. Yes, I'll give you little time. Tell me, my dear. Tell me. Chino, close say. Yes, my dear, any answer? Yeah. So what will be here? First of all, 6 lakh rupees. By end of correct na 2019 means 19 you got it means by 2020 first year, 2021 is equal to second year, 2022 is equal to third year. Correct na? So asset is obviously in the balance sheet, asset is different. You must have recognized 6 lakh rupees. One and a half means 4.5 lakh rupees you must have recognized, so depreciated. So 1.5 lakh rupees is the depreciable asset. So there are two answers, that is A and B. C are the right so far. Correct. Now, what about the deferred government grant? Deferred government grant, you got 50,000 rupees. Correct. Now, 4 years means 12,500 per year. Correct. Now, 4 years you reduced in the sense what? 37,500 you have reduced it. Then obviously 12,500 is left over here. Correct. Now, so what is left over here? This is the leftover thing. That's why C is not correct. A is correct answer. Agree? Right. Next. Definition of government grant excludes. Yes, look at this and answer. Definition of government grant excludes certain forms of government assistance, certain forms of government assistance which cannot be reasonably have a value placed Just a second. Yeah. Certain forms of government assistance which cannot reasonably have a value placed upon them. Certain forms of government assistance which can reasonably have a value placed upon them. If the value is there, then why not? Obviously, you should do it. Certain forms of government assistance which cannot be accurately have a value placed. Accuracy is not relevant actually. Certain forms of government assistance which cannot have a value placed upon them. Okay, right. Cannot reasonably, below reasonably word is gone. That's it. So look at A, B, C, D. Which one do you feel, my dear? Hmm? Only the first one. A is the right answer. If you cannot reasonably measure also, na, that is one of the scope. Where do I get sir this? You will get it in the scope paragraph itself. Nothing else. Scope paragraph it is very clearly already explained, which we have also taken it in the PPT. And you cannot measure the value of it, then how can I take it? Correct. Now, where the government is also participating as a owner, correct. Now, then also you're not supposed to take this into account. Okay, right. So I mean, one or two, three items are there. Out of that, this is the third information which is there in the scope paragraph. I think that's all. Correct, no? Yeah, that's all, my dear. This is about your Ind AS 20 government grants. Let's take up that Ind AS 23, okay, 23 in some time today itself. Okay,